Good morning, everyone. This is a video for Gonzo. George, you know who you are. Really appreciate your question about Fibonacci. This is a chart that I had created many moons ago, I guess. You hide this and take a look specifically at what I was doing here. Okay, measuring 100% measured moves, leg 3, target. All right, so I don't need this. I'm going to start over and let's talk about your your data. So hypothetically over here, you presented this window, which was your data, George, related to Fibonacci. And I'm trying to understand, looks like you have the defense levels up here. You have the defense levels down here. You're highlighting this area, it looks like. You got the deeper low, which is a washout low. You understand that this is a big pullback washout low. So real support's probably right over here in this defense level. You've marked it up pretty clean. You've got some pretty solid channels coming right across here, which is perfect, creating this potential flag. The way I would interpret the flag is that we didn't actually set the peak up until this point. So this would be a pullback into a peak, which, kind of gets set here. I would say that this is more volatility playing out. So we would have an A, B, C potential breakout. A, B, C, D makes sense that this is an A move here, B, C, D, E move here. This is a 1 hour chart. Okay, so let me come over here and come back to this chart. Set this up as 1 hour. And what we'll try to do here is kind of mimic some of what you've done. Now, the defense levels are critical to understand in the sense that price must move above the defense levels, in this case right here, to try to move into bullish territory. We redefended the defense level here. Now, we've come up and touched the defense level here, which is where we have rejection, very clean rejection in terms of this structure. So right now, we're still in the middle of this zone. We have established a deep low here based on Fibonacci price theory. This would be the current low price level. This is an ultimate low because it can go back 20, 30, 40 bars. No problem. We haven't touched that price level. This is the ultimate level. So I'll draw a line off of here. If we get below this level on gold, we are essentially extending a downtrend. And this is our ultimate high up here. So if we get above this level, we're extending the uptrend. Intermediately, we have another high level roughly right in this area, which is a either going to be a unique or a standout. Looks like possibly a unique. This is definitely a standout here. High. So we have these two levels, which are the immediate upward channel. That means 5,200 is going to be our breakout zone for the move higher. Now, let me come back and take a look at your chart again. You got a lot of data here. You got this dash line with this center line. I'm assuming that's a standard deviation channel. And you got some marks here, 16 days, 22 days. So possibly cycles from this point to this point, maybe. Don't know. And I would suggest that your question, need your KSAs on fib. First picture with prior, second picture has crossed the 50 to confirm the base price. Would it be expected that this level will, must, can, might be retested? Yeah, that's the theory behind Fibonacci, is that it's either going to go up or down depending on what it's doing. So let me take a look at your second chart. So it's retested to 50, and you still have the defense zones. That sets up our deep low, and I come back over here. Here's the 50 area you're talking about. So now what would happen George, is you must essentially continue to establish these Fibonacci levels. And I'm going to just draw a few for you to. And what you want to do is pay attention to what I would call phases or legs in trending. So you have this scenario here. You have another one potentially right down here off of this low up to this high. So you can see here that this defense zone sets up right here, moving right up to this high. We come down here. Here's the defense zone right at that 50% level. That also happens to match a defense zone right down here between this area and this area as a secondary defense zone. And then we have the defense zone again right here in this smaller channel and 50%. And we've got the defense zone here, the defense zone here, and then we have the bigger, broader breakdown defense zone right down here, which is our primary support channel way down below. So now what I've done is, again, multiple Fibonacci's, and we still have this zone here, which is intermediate zone, which we could do theoretically by coming in here and picking this low up to this high, and that would put another defense zone right here. Make sure I got this right. Right here in this lower channel, targeting this upper channel. So again, the defense zones tell us that, price right now is holding above this defense zone and has reached this little minor defense zone, which is based on this rotation here from this upper move, this low here to this high. And we have this intermediate defense zone, which is from this low down here to this high up here. And then we have the broader defense zones playing out here. Now, we can identify other types of defense zones, but in essence, right now, we're battling this support zone. So, what's happening is we are battling this area as support right now. We're trying very hard to hold at this support level based on these defense zones, and we would have to get above this level right here to indicate any upward trending. So understand that right now we're in the midst of a bunch of zones. We're trapped essentially between this zone here and really this zone down here based on Fibonacci. We're in a downtrend right now on a pullback. We're looking at a market that's moving downward. Dow Jones moved down pretty hard. So we're not seeing that big move yet, but the Dow Jones is moving downward. We could see another panic low. Yes, we could easily come back down and retest this low. That would not be out of the way. More than likely, though, we will retest this area. So let me try to do that again. The lower defense zone here, because that's the most immediate trend. So understand that I've measured these trends. Okay. I measured this trend here. I'll draw them for you in a heavier form. I've measured this trend as one zone. I've measured this trend as a second zone. I've measured this trend as a third zone. I've measured this trend as a second zone or a fifth, and this finally is the last. 1, 2, 3, 4, 5 different Fibonacci waves. We also have a wave here that we could count if I wanted to really try to pinpoint if there's any correlative support and resistance zones. I would do this. I would try to come in here and I would highlight these zones. So we have a defense zone right here. Set it up as yellow. And we have another defense zone right down here in yellow. And then I would just drag this over, and you can see how this defense zone plays out. And we have this other one right here. So this tells you again that we're running into a fairly strong and broad level of defense right now, right in this area. We've got the blue defense zone here. We've got the green defense zone down here. The yellow defense zone here, which is an upper defense zone. And this is how Fibonacci plays out as blocks. So what I'm going to tell you right now is that, weaker volume, likely to try to find support somewhere in this area, just above this high, probably right in this area here. Let me try to draw that again. Really likely to try to find support in that area. More than likely right up in this area here. Right up in that 50-50 area or so, which we've already tagged. And I would believe that that would be the most likely support zone because it's below this primary blue zone right here. It's within the yellow zone, slightly above the yellow zone, and right down here in this green zone, indicating that really this area is more than likely going to be critical support. And again, that's how I would try to use Fibonacci. Now, using GAN, which is price channels, let me just automate this, scroll all the way back. And what you would do with GAN is you would start picking channels from lows to stand out and extend the right side. And what you need to do with GAN is you need to start playing around with targets. So here's a deep low that kind of targets where we're at. And you can pick any zones you want to follow. You want to look for correlation. It doesn't matter that this broke through. That's okay. That prices, support and resistance channels like this are soft. They're fuzzy. Think of them as, yeah, you can get through them once or twice. You want to look for, do we have correlation? Do we have correlation? Do we have correlation? Yes. Do we have correlation? Yes. Are we coming out here to correlation? Yes. Very likely that that correlation is going to stay. Now you can take that channel and you can try to find the upper correlative channel. So that makes a little sense right here. Might make a little more sense right there. And you can see now we have this channel that plays out over here. This would then give us the ability to put a middle channel somewhere in here. And we could again look for dozens of these types of channels. I would start by moving across these major highs. It doesn't provide any real critical support. I'll change this to dark green. We can move across, let me see here. Let's try this. Let's come off of this low. That's going to move up fairly high. Let's see where this puts us. Let's make this deep red. Interesting. Correlation, correlation, correlation into this channel. Correlation, correlation, correlation. All right. So just an initial test of price tells me again, looking at these correlations and looking at this potential breakdown, that, really, if I come back over here, we're in the midst of this channel. We have this deeper correlative zone. I will draw it as a circle right down in this area, which could end up being support. and we have a deep low potentially moving down here, which would be a sign of a further breakdown. It would break below this ultimate low and potentially break down even further beyond this ultimate low. So holding at this level would indicate very strong support for a potential change in direction, rallying back up here to the upside. Failure at this level, breaking down below this ultimate low level right over here, would indicate that we have a chance to move down to here and then potentially down to here. These channels are playing out very cleanly. The Fibonacci zone is playing out very cleanly. We're in a general uptrend because of this new high and the fact that we're moving in an upward trend. We're in a bit of a pullback within this channel. This channel here, the blue channel, you can see goes all the way back to November, December. And we're staying above this critical low right down here. So I would suggest that we have a very strong chance of a rolling upward trend, a reversal in price after this pullback takes place. And I would think that, gold is going to find support right around this 50.50 to 50.85 level. And if not, we're going to know because gold below, say, 5,010, 5,015 would be a very critical double bottoming formation. Anything below this lower support, 49.50, means that, as I stated, that we're very likely coming down into this lower channel. And you can see how all of this kind of plays out. I'll go to a 2 hour, and this is price structure. Now, understand that we are having a auto scale. We are having a very large excess phase peak pattern play out. So you can see how we've moved up here, consolidated, rallied up. We got above it right over here on a big breakout, consolidated up to this high. We now have this new excess phase peak pattern setting up here. I'll draw it in blue. Okay, we're flagging. I believe we're going to get a breakaway in that blue mode, and I think we're going to see a very solid rally up to 6,100, 6,200 for gold. But, there's a lot of price structure playing out here. What I can tell you right now is as we build these moves, if we're able to again move back up into this zone, 5175 roughly or higher, theoretically 5200 or higher, then we are going to see a very solid rally back to the upside. So your zoning and your Fibonacci's are absolutely correct. Just remember that each wave creates these defense levels, and where these defense levels overlay, which again, we're getting a very strong defense level overlaying right here, would indicate this is the area we're going to try to find support. Failure at this level to break down would be very, very bad, let's call it, for gold. It would indicate a stronger breakdown is likely to take place. Holding at this level will likely continue to move us up through this defense level, and then understand that we have these upper targeted defense levels as well right here. You have another one right here, which I'll leave as yellow for now. And then you have this one up here. And that's it. All the other ones are down here in lower channels. So really, if we do hold and we roll back to the upside, you're looking at 5,300 as the next level of resistance. Well, beyond this 5,200 level, 5,300, then 54, roughly 25. And then beyond that, we would have to measure the flag move here, which would essentially be this measurement here from this low to this high, not extended. And we would attempt to take this up here. And this would suggest 68.51 roughly. as a 100% measured move. Now, Fibonacci typically does try to make Fibonacci 100% measured moves, but anywhere in between here as well is going to have defense levels. So the way you know that you're rallying up beyond the this immediate resistance right here at 58, 5,900 is that you get above that 58, 5,900, and then we should target this 66, 6,700 layer here. The defense levels again coming into play. So I hope that makes sense, and I hope that answers your question. Again, this is visually what I try to look at in charts. Remember, price is the Fibonacci price theory teaches us that price must always attempt to make a new high or make a new low. Always. Never fails to not attempt to do this. But you must understand that failure to make a new low means that it must turn around to try to make a new high. And vice versa, failure to make a new high means it must turn around to try to make a new low. And again, so it's always either trending or turning, and that's the whole basis behind the concept that price is either trending or flagging. It's either moving to a new high or a new low in a trend mode, or it's consolidating before a breakout, attempting to move back into trending, which is narrow price rotation. So think of it like this: price is either trending or moving into a Fibonacci channel before some sort of a breakout. And what is this? It moves up, sets a new high, comes down, tries to set a new low, fails. All right, it failed. What does that mean? It's going to try to come up and set a new high. It failed. It's going to come down, try to set a new low. It failed. This is flagging. Flagging is the construct of Fibonacci failure to establish new highs, tightening the channel before we get into some sort of a breakaway. That's normally why we see this big volatility before we get into some sort of a breakaway move. So, what's happening is Fibonacci price structure is actually playing out in this manner, failing, 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 then eventually establishing a new low, potentially, if this was a breakaway. Okay, fine, but failing to get below this one, coming up, establishing a new high, failing to establish a new low, rallying up to a high and moving into trending. So remember, this is always Fibonacci, always structure in price. Now, it gets a little difficult to read sometimes in these consolidated ranges. Like, for example, I believe gold is going to continue to melt upward, and I've got my trades based on that trend. But you could come in here and argue, well, Brad, we're in a downtrend, we're establishing a new low. Technically, we should be short. Yeah, technically, right now, short term, if you look at this and you come in here and go, well, Brad, should we be long or short? That depends on your timeline. Right now, we've broken this low and we're breaking downward. So, short term, you should be short. Intermediate term, with these new higher highs and higher lows, even this low is higher than this low back here. We should be expecting a bottom off of this low. This is a retest of support, potentially turning around and moving back up into the dominant trend. The reason why we have that dominant trend is we have yet to break below this lower channel, this blue, dark blue lower channel right there. And because we're failing to break below that lower channel in this uptrend, the primary dominant trend is still to the upside. So again, if you were coming to me and saying, what should I do? Lowest risk opportunity for you right now is to buy into this low, set a stop level down below this level, probably 49.75 or so. Continue to buy into deeper lows, staging smaller positions as need be. And until we break below 49.75, 49.80, we are technically in an uptrend. We're in a pullback. We're flagging, and we will likely attempt to hold support at this level and rally. Okay, hope this helps, buddy. Talk to you later.